Simone.
Okay. So, Gareth, nice to have you here today.
Thank you for having me.
Yeah, so we usually did this weekly meeting that it's called Quattro Chiacchiere with. So it's like Ask Me Anything with DeFi projects. And just a second, sorry. Okay, was a problem with an audio. And yeah, I mean, this week we have Montecarlo DEX. That is one of the few DEX, I mean, in the space, active in the space, maybe the only one that is working with the derivatives and perpetuals. This is an exciting space within the DeFi. A lot of projects are coming in this subcategory. And we would like to understand more about you and about Montecarlo DEX. What's the value proposition of it, and how do you are going to be the leader? I mean, or what's your strategy to be the leader of the market?
Okay. Yeah.
So I mean, starting from yourself, Gary, feel free to introduce yourself, your role in MCDEX. And yeah, just give a brief introduction on Montecarlo DEX. Me and Emiliano, knew very well the project, and then we will make some questions just to go more in depth and dive the project.
Cool, that sounds good. Well, thank you for having me. I'm Gareth Mensah. I'm head of business development for MCDEX. So I'm based in Medellin, Colombia, but the core team is based out of China, so very decentralized. Our head of marketing, Vikas, is based out of India, so we're around the world. But yeah, so MCDEX is a DEX for trading perpetual contracts. So for those who don't know perpetual contracts, there are derivatives, right? In this specific case, they're leverage contracts with no expiration date. So you can think of them as futures without the expiration. So you can continue to have them for a long period of time. They were introduced first by, I think, BitMEX. So they kind of really became popular. BitMEX became one of the larger crypto exchange for the last couple of years. And so what we do, where we innovate, is to actually bring those type of contracts onto DeFi. So our perpetuals are actually smart contracts that are deployed on the Ethereum mainnet. We started with ETH-Perp, so the Ethereum contract with up to 10x leverage. And then we added the Link-Perp, and more recently we have the SNX-Perp, we have the Comp-Perp, and the Lend-Perp. So we're kind of focusing on a DeFi project that we think have a long-term value and will be around for a long term, and that will be kind of like the corner piece for DeFi, and to offer a trader a range of product that they can trade. So what makes us a little bit different from other platforms that people might have heard? There's a few other platforms that are actually tackling this question of bringing DeFi or bringing derivative to DeFi in the decentralizing and making more those exchange transparent. What we took as a different approach is to have a hybrid model. So right now, most people that trade perpetual contracts are used to an order book. So you go to an exchange and you see a list of buy orders and sell orders. And that's like, for most traders, that's the bread and butter. That's what they're used to. That's how they want to think about trading perpetual contracts. What we think is interesting, on top of having the order book, is also adding an AMM. So the AMM stands for Automated Market Maker. And so if you're used to Uniswap, you are already familiar with those. And so you're able to trade against a smart contract as opposed to trading against another trader. And so what that does is it brings a on-chain liquidity. Now, which is pretty cool about that is once you have this on-chain liquidity, you can actually build on top of it, just like you build against or on top of any smart contract. And this happened in a permissionless way. So you don't have to ask MCDEX for permission to build on top of our protocols. And so that's really cool. So we're both an exchange, similar to people are been using in the past with an order book, but we're also a money Lego that people can use to build applications and services on top of. So we released earlier this year I want to say the beginning of the summer. We had a pretty exciting growth. We reached, I think, a top of like 18 million of TVL of total value locked. It's been going down recently, and so what we're trying to do right now is to focus on adding value to both our traders, but also a community of token holders. So recently introduced the MCB token. The MCB token is the governance token for the platform. Right now, it's used as a reward for people who want to play the role of liquidity providers. And so what that means is for people that want to add value to our AMM or liquidity, we can actually give them reward, and that reward is in MCB tokens. So right now, if you add ETH to our ETH proof contract, or Link to a Link proof contract, and so on and so on, we have this yield farming or liquidity mining campaign. We actually earn some MCB token. So that's the first utility for the MCB, but we have a roadmap to actually add utility over the next couple of months. Last week, we just released a voting DApp. So what that means is we have proposals. So it can range from the percentage of trading fees, the type of contract that we add or remove from the platform, the speed at which we mint new MCB token. All of this eventually will be decided by the community. So we just launched this app to get people to vote on different proposals, and in the future to actually create their own proposals to kind of decide the direction for the platform. And so as we keep building, we will give more control and more power to the MCB token holders. So I think that's where we are today. We're glad to be working with you guys. We've been in touch like about a month or a month and a half ago, and I love what you guys have been doing, and yeah, it's been fun to be in touch.
Yeah, this is a thank you for the wide explanation, and I have really different questions, starting from the company. I mean, so for example, just to give more context, when did the company launch? Like, let's say in 2 years, 1 year, how many people you are, and where are based? And then I have more questions on the project, and the specific on the functioning of the DEX.
Sure. So the team has been around for, I want to say, probably like 5 years or more. And so what we did prior to launching the DEX is they were a team of miners, Bitcoin miners. And so they're based out of Beijing. And part of the team is, 80% of the team is developers. So they were kind of looking into ways to be more involved in Ethereum. And so they came up with the concept last year and worked on it and released the platform this year. The team is about, I think, 18 people. Most of them, almost all the team is based out of Beijing. But as I said, we have our head of marketing that's based in India. His name is Vikas. He's on our Telegram and Discord. And I joined the team 2 or 3 months ago, and I'm based out of Medellin, Colombia.
Yeah, and regarding, for example, the exchange. So something, for example, me that I mean, doing trading since years, something that it was new for me. It's the new function that you set a limit, so a minimum limit and a maximum limit for the perpetual to have the leverage on MCDEX. And so you don't have this kind of limits, for example, in centralized exchange like Deribit or BitMax or FTX, for example. So how this limit works, and why did you define these limits for the perpetuals?
Yeah, that's a good question. And sorry for the background noise of there's a dog in the building that keeps screaming, so sorry about that. Yes, so there's different platforms in crypto. So I think there is a difference between the way people think about leverage in centralized or regular exchange and versus decentralized exchanges. So I've seen on some exchanges that you offer up to 100 times your collateral or sometimes more. We started with a more traditional approach because there's a funding mechanism. We actually need to have a way to fund this leverage that users and traders are able to use. And that's where the liquidity mining comes into place, is that we have to bootstrap liquidity. And so at first, I wouldn't say dangerous, but it's a bit, it's difficult and tricky to give users a lot of leverage right away. I think it's something that as we grow and as the liquidity on the platform increase, then we'll have more options to increase the leverage. But I think that will be a decision that will leave the community to decide. So 10x is actually like almost like a standard. If you look at other platforms in the space, it's more or less what they gauge to be like a good leverage. Some will say a little bit less, like DYDX I think is like 4 or 5x. But so we think that it's a good start and it's safe enough that we can actually handle it in terms of liquidity. But in the future, we could probably, if we have more, for example, let's say we have more ETH coming to the platform, we might be able to increase the leverage. And the same thing for other pairs as we add Link or Compound or SNX, based on the type of volume that we see and liquidity that we get on the AMM, we'll be able to actually increase or decrease the leverage. But for now, just like a standard value.
Cool, cool. And what about I mean, we are used to basically do a transaction every time we interact with a decentralized platform. But this is not always the case for MCDEX. So where are the points when the user have to execute a transaction, and especially in this period of high gas prices, have to pay maybe a lot of fees?
Yeah. Yes. So for now, that is one big issue for us, especially the last couple of months. That the gas prices have been rising increasingly. I think a lot of it has to do with DeFi and all those different projects that are coming to the space, and that's kind of the price of success. Like in a way, it's like the coolest club that everybody wants to be inside, but there's a line to get in, and that's the issue. So yeah, so for us, because we're DEX, all the transactions are happening on chain, so you have to actually pay that transaction fee. And so some of our smart contracts are more complex than others. So the smart contracts that is involved with the AMM transactions is pretty costly. The transactions that are around the order book are less costly, right? So what we're looking at actively is L2 solutions, ways for us to reduce the cost of those transactions. So we're looking at optimistic rollups, we're looking at ZK rollups, and even some other blockchains, just to get a sense of what are the options out there and what are the best practices. We do try to make it easier on our users to, so one of the things that we do, for example, we have a distribution of MCD tokens. Mm-hmm. And so right now, what we wanted to do earlier was to have a daily distribution, but it became too expensive for us.
Yeah.
So we use an app called Disperse. And so once our users or liquidity providers reach a certain amount of reward, then we disperse those tokens. So we're looking for short-term ways to alleviate those things, but we also have a long-term strategy to really fix that and to move to L2 solution.
Got it. And you added, I think that you are the only one that added the DeFi tokens, the perpetual for DeFi tokens. Are we going to expect that you add maybe other tokens in the next weeks?
Yeah, so that's a great question, because when we started, our philosophy was to say, we want to make sure before releasing the contract that we have enough demand from the traders, right? So when we released ETH, we knew there were going to be a lot of traders looking to trade ETH as we saw it on other platforms. And so the plan was to add BTC and then to talk to traders and figure out what kind of trading they were looking to do. But early on, we got a lot of demand for different tokens. We got demands for Ample. We got demands for YFI or Waifu, I'm not sure how to pronounce it, but like the new I earn token. For Curve, for different type of token that seems to be more based on trends, based on what people are seeing in the market, and their understanding of how those trends were going to play out. And so we kind of shifted how we were thinking about adding new pairs. And instead of being kind of, I guess, like waiting on traders to tell us which pair they want, we're going to be a lot more proactive. And so what we're doing right now is we're working with Chainlink. And so the context in that is that for us to add sorry about that, for us to add a new pair, we have to actually have a price feed. So that price feed comes from Chainlink. They give us basically the price of the collateral underneath our contract. And so we actually need to work with them to figure out which new token they will provide a price feed for. And then based on that, we can actually list new tokens. But we're definitely looking to decentralize that process. So what that means at some point, and that's part of our roadmap, so we can disclose that, at some point we will actually allow the community to decide which token should be listed next, right? Now that's a goal, we're not there yet, but what we're trying to do right now is to be actively paying attention to the pairs that we should be adding to our exchange.
Cool. And in this sense, right now you have many assets in the platform. What about the the users and the volume of this category of trading? Because it's really different than traditional trading. So what about the volumes and the user that use the platform?
Yeah, that's a good question. Sorry about that. One quick second.
È il bello della diretta.
See, living in Colombia is fun. There's always something happening. My neighbors are right now. Sorry about
No problem.
Yes. So what I was mentioning earlier is at the beginning, I mean, like last couple of months, we've seen a rise in TVL. The TVL, the total value locked, increased very high. And so similarly, our trading volume was pretty high. So I don't quite have the number for the trading volume, but I will look right now. I think we can say it's about like 2 million.
Yeah, please. This is an important data. If you can share some chart, or if you want to share the screen, it's
okay for us.
Okay, I'll do that right now. Share my screen. Let me know when you can. Oh, it's. Can you give me permission? So,
yes. Okay, you can do that. Right.
Yeah, I can see it now.
Okay.
Can you see my screen?
Yeah, it's perfect.
All right. So at the very top of this is the MCDEX exchange, and what we're looking at is the trade section. So on the left side, you can see the pairs or the contracts that we're offering today. We have the ETH perp, the Link perp, the Compound perp, the Land SNX, and we also have a Trump die. So if you want to vote on the American election and you think who's going to win,
please describe this instrument, because it's interesting. It's similar to the prediction markets, and it's cool. Go ahead.
Yeah, so this is actually one of the early product that we were listed. We've got a lot of traction around that as well. So you can think of it as a binary trading, where you're basically saying that you believe that either one outcome or the other will happen, and then you can actually like buy or go long or short that outcome. And then at some point, actually, when the election happens, then the outcome will be decided. So this actually is a way for us to show that the MCDEX protocol is not just for trading perpetual contracts, but it's actually for all kinds of derivatives. And so one thing I should mention is, well, right now, MCDEX is taking the form of an exchange. Underneath that exchange is a set of smart contracts called the MAI protocol. And so MAI in Chinese, well, not sure which one exactly, but stand for both buy and sell. So the MAI protocol is really a protocol for you to buy and sell anything. And so we can anticipate that in the future, people will be able to build exchanges and services for other types of derivatives. So we can think of interest swap, option trading, binary option trading, and other types of derivatives. And so we have the Trump die, we can probably have other elections or other events. But so what I was showing you guys earlier was this the first contract that we listed, the ETH perp. And so you can see the type of order that you can use. I think most that the traders are used to: limit orders, market orders, and limit orders as well. And so you can then enter the limit price. You can also enter the quantity. And so here you see the leverage. It goes from 0x to 10x.
And we can see also 1.8 million as a volume in 24 hours, right?
Exactly. And that has been pretty much stable in the last month or so. I think we reached a higher volume earlier, and things have quieted down a little bit. As we add a new perp contract, we've seen the volume increase recently as well. So as you were mentioning on the top, you can see the total volume in the last 24 hours. You can also see the funding rate, right? And so that's an important concept to understand, because that's part of the, this is like a live demo, so always happens. That's part of the mechanism of why we're able to provide this derivative with no expiration date, right? There has to be a funding mechanism. And so the funding rate is, to make it very simple, if the funding rate is positive, it means that there are a lot more longs or bulls than bears, right? And so the longs are going to be paying the bears or
short positions,
right? And so in reverse, if the funding rate is negative, what it means is that there are more short than longs, and then the shorts will be paying the longs, right?
Yeah.
And so that's how we're able to fund those derivatives, right?
Yeah, and it's gonna help the mark price and the index price to stay closer.
Exactly. So that's another topic as well we can go into. So the mark price and the index price are very important, and they're the base for the funding rate. So the mark price is the price of the contract, whereas the index price is the price of the collateral underneath it. So in this case, the index price is the price of ETH, and then the mark is the price of the ETH perp. And so they should be more or less close, right? And the difference is how we calculate the funding rate, right? And so our index price comes from the Chainlink price feed. And so we're working very closely to get the best or most accurate price for all the different contracts or assets that we list on our platform. So that's kind of like the overview of like the trading aspect. You're actually seeing my my current position. You can also see the liquidity part. So that's basically the part that's involved with adding liquidity to our AMM. And so at the top, you can see the pool. So information about the pool, the collateral. So one thing that's important as well is what we provide at MCDEX is inverse perpetuals. And so what that means is that in the case of ETH perp, the collateral and the way it's settled, the way the contract is settled is in ETH. So you provide ETH, and then you're also paid in ETH, right? In many other platforms, you have what they call a vanilla perpetual contract. And so what that means is you're actually using the base currency as opposed to the quote currency. And so in most cases, you're using a stable coin, right? So usually you invest in USDT or some other stable coin, and most likely that's how you also get paid back, right? So here we're actually focusing on people that already have those assets and they can use them as collateral. And so we think it's a value proposition that a lot of people will find interesting. And so you can see, and I'll walk you through the process of adding liquidity to the pool. What happened here is you'll be able to actually enter the amount that you want to add to the pool. It will calculate the balance and liquidation price. And so it will tell you basically how much leverage you can take as well. So we have two options. We have the basic and professional option. The basic by default will take the leverage of 1x, right? So it gives you like a safe share of liquidity. It's almost like a spot market, right? You just add this, your collateral. But you can actually, if you think that you understand or you see what's going to happen in the future for the market, you can actually decide to add liquidity to the AMM and create a leverage position. So you can take a 2x, a 5x, or if you think if you want to be safer than a 1x, you can take a 0.5x leverage position by using the professional option, right? And so what happened is you actually add liquidity to our AMM smart contract. The smart contract will take your collateral and more or less divide it. 1/3 more or less will be the ETH for the collateral. And the third more or less will be a short position at 0.5x. And so what that creates is a nice balance between your collateral and like the volatility that happens when they're trading on the platform. And it creates a third position, which is this long position that you see here. And that gives you a kind of like a well-balanced first deposit on our AMM, but also a leverage position for you to trade. And so what you can also do is, as the market fluctuate, right, as those the price of the perp moves ups and down, your I guess your balance of asset or I guess the AMM also changes. And so because it's a bit complex, what we provide is this rebalancing mechanism. That is right here. So basically, what you want to do ideally is you provide, and maybe I should take a little step back. So for people who are familiar with Uniswap and AMMs, most AMMs, and it's changing every day, but most AMM require a pool with 2 assets. And the ideal thing for a pool is to have 50-50 of those assets, right? Like a nice balance of the 2. The new pools like balancers, they're more flexible. We can have 80% and 20%. There's even a new pool, I can't remember, I think Dodo, that has a single asset pool, right? We opted for now for more like a traditional way of doing AMM. That might change in the future. But for now, we want the balance to be 50-50. Now that might change as people go long and go short. And so we provide this this data to let you know about your balance, right? And you can see here I have this imbalance rate of 1%. Over a certain amount of imbalance, what we provide is this option to rebalance your ratio. And so the reason you want to do that is because if your imbalance is too high, then your reward of MCB will be a little bit lesser, right? It won't be the 100% full reward. It'll probably be like, there's like an algorithm, but it's a little less, right? Now, if you want the full reward, what you can do is rebalance. And so what that will do is it will look at your long that's in your trading account and update it to make sure that it can help your position in the AMM. What you can also do as a secondary option is look into your wallet and ask you if you want to add ETH from your wallet to rebalance. So you can rebalance from the exchange, from what you already have deposited, or you can rebalance with funds from your wallet as well.
That's, I mean, it's a very deep insight on how it works. I mean, I really like it because it's really simple from some aspect, but at the same time, it's very innovative. I mean, also professional traders could leverage this functionality, especially this hybrid mechanism. It's quite clever. I mean, it's very cool. I would like to get back a little bit to the token of MCDEX, because you talk that basically you will give rewards to the user that basically help the liquidity of the DEX, but at the same time is an essential tool for the governance. Are you going to add other features to the tokenomics of MCDEX, or there are other utilities of the token?
Yeah, and how the token today extract value. So I mean, you are doing, let's say, 2 million of volume every day, and how the token holders can benefit from this?
Yeah, that's a great question. So the MCD token is meant to be the governance token for the entire platform. And so the initial release of the MCD token was meant to be a reward for liquidity providers, right? So it's kind of like this limited functionality at first, but on our roadmap, I can probably show it as well. Make sure it's screen back. On the roadmap, we actually listed the ways in which we want to add utility to the token. And so we kind of think of it as like a, you can see my screen, right?
Yeah.
All right, great, perfect. So we kind of think of it as a progressive decentralization, where the MCD token will progressively see utility be added to it. So right now we added a voting or governance app. And so if you are an MCB token holder, you get to vote on the direction of the platform. For now, the propositions that we had were around the vesting schedule. So the thing that we want to incentivize is for people to be long-term, really sorry about that.
No problem.
Participants in our ecosystem, as opposed to being short-term speculators, right? And so one thing that we're looking for feedback from our community is to say, because it's I guess there's trade-offs, right? Like one way you can think of it is, if you are a liquidity provider, you do benefit from having people who hold the token for a long period of time and are invested in it in the long run. But you also do benefit if there is good liquidity on exchanges, on Uniswap or on Balancer, as it brings more people because it's easier for them to get a position of MCB token. So we have to like strike a good balance between incentivizing liquidity and then incentivizing a long-term thinking around participating in our platform. So one thing that you mentioned, Emiliano, I think you mentioned is we are thinking about, we're working on using the MCB as a way to capture the fees, right? For trading fee. Also, we can use it as a collateral for investing in perpetual contract.
Sorry, Gary, in which way capture the fees? Burning, distributing fees, in which way?
So the MCB token holders would be receiving the trading fees.
Okay.
So they would be both receiving the trading fees and also deciding. Can you guys hear me or?
Yeah, we can hear you, and I mean, don't worry about this. It's live, so it's normal.
Yeah, and also the MCB token holders get to decide will get to decide at some point the percentage of trading fees, right? Like ultimately, the idea is that at some point, and maybe it's there on the roadmap, but at some point we can almost have like a line at the end, like you say, future or end goal would be for MCDEX to become a DAO, right? A decentralized organization that is completely run by the MCB token holder. So every decision at some point,
but not like Sushi Swap.
Yeah, that's why I think we take the progressive approach to decentralization. I think there's some decisions that do take time to understand what are the best practices around, and then to also get feedback from the community rather than, I mean, some people believe that, hey, they have the model and they think it's going to work right away. But I think progressive decentralization and getting feedback from the community is very important, and also building partnership, long-term partnership with our users, with our traders, with investors, with developers, and other people or members of our ecosystem. It takes time to figure out how to align the different incentives. And that's what the token is supposed to be, is a way to align the incentives of all the actors that are part of our ecosystem. And so we will have a roadmap, but we have a monthly or bi-weekly governance meeting where community members get to give us feedback, and we get to hear their concern or proposals that they've written. We have a similar to the EIP, we have an enhancement proposal repository that people can write proposals to actually debate and suggest ways to change the emission, the vesting schedules, and all kinds of decisions that can be done around the MCB token and potentially the platform as well.
Yeah, and other question that I have, it's basically, I have two questions and still in token economy. So the first one is, as you said, there is always a trade-off because you need to attract liquidity providers, but you need to convince them to stay for long term. Otherwise, they are gonna dump the price of the tokens selling on the market. So, and what's your approach on this? So, what are you doing to, I mean, let's keep a sort of equilibrium of the token and try to, I mean, convince the liquidity providers to stay longer? And this is the first question. And the second question that for me, it's really important, it's about the inflation. So today we have like 1.8 approximately 100,000 million of MCB. We know that every month, then you will explain better, 900,000 of new MCB coming into the circulating supply. So can you describe the inflation over time?
Yeah, okay. So the first part of your question around the vesting. So we right now we go through rounds of liquidity mining or yield farming, and so at the end of every round we'll have a governance meeting to get feedback from the community and to also propose what our plan is and to actually like have a conversation around the plan. We are about to introduce a vesting schedule so that if you receive MCB token, you will not just be able to directly move them onto the market. So we have two proposals around that. I can share them after the meeting. We have proposal number 5, which is from our co-founder, Liu. And we also have proposal number 8, which is from Tyler, one of our community members. And so both are around a vesting schedule. They're a little different in terms of details. The one from Liu actually introduces this idea of tying MCB with mining efficiency. So if you remember, I can show you right now, in the liquidity section, you have this imbalance rate. And so the idea is that you can actually tie this efficiency of getting the maximum reward to having or not having MCB tokens. And so we can actually tie this future reward to having MCB token. And so, you know, I don't want to be biased towards one proposal or the others, but there are ways for us to incentivize our liquidity providers to hold the MCB token while we actually add utility to it. But also, we definitely want to make sure that we're listening to the community. For example, in our first governance meeting, we were debating whether to incentivize Uniswap or Balancer or even Moonswap. And so we ended up deciding to incentivize Uniswap for various reasons, but it was important to actually hear from different members the reasoning behind that. So I think this round is about to end. I can't quite remember, maybe next week in a few blocks. But this will happen. We will introduce the vesting schedule based on the proposal. So those conversations are happening on Discord. And so we welcome anybody to jump in on Discord and to kind of like, you know, you share your opinions and let us know what you think is the right way to go about the vesting schedule or other initiatives that you have in mind. So that's around the first part of your question. The second part, yes, there's definitely something that we've been addressing because we've got a lot of questions around that, about the inflation for the MCB token. So our other co-founder, Gene, wrote an article this week around pausing this inflation for 6 months, right? And so the reason behind it is that there's a smart contract right now that has this automated inflation. And so what happened is, once those tokens have been unlocked, then anybody, usually our team will do so, but anybody can then release those tokens, right? And so that's the inflation that people see when they look at the total available tokens on the market. So we've decided because we've got a lot of feedback from that and a lot of misunderstanding. There was a mischaracterization of what was happening there. Those tokens were only meant for paying for expenses, right? There was a confusion between what those tokens were meant for. Those tokens were never meant, they were never used for voting and for influencing the decision around the governance of the platform. They were only meant for expenses like audit and other technical things that the team is doing. And so we decided to just pause that process for 6 months. And so I think it will resume in sometime in March of next year. And so on the details, I'm not 100%, I read it, but that was a while back. But I think that you will see a drastic change in how the inflation that's been happening will be reduced, right? Basically, if I remember correctly, I think it will just basically say that the team will only have access to this token in 6 months.
Cool.
So, and this is defined, right? This is decided.
Yeah, this is decided. So
and after this decision, how will be the, if you remember, the number of new MCB every month that it will be added to the circulating supply?
Yeah, that's the part I'm not 100% on, because I don't want to say something wrong. But I can share the article after this. We'll have all the details on it.
Ah, yeah, okay, perfect. Okay.
Cool. And we have a question from, we have several questions from our users. The first one is related more to the security and to the, we saw also in the, white paper roadmap about some sort of, socializing the losses, or anyway, using maybe MCDEX token like in staking, like some sort of insurance funds. So what are the protections that Montecarlo DEX has for the users? I mean, we know that was audited by Open Zeppelin, so we are pretty much safe about this. But what are the additional protection? There is maybe some covers that could be bought on Nexus Mutual. There are in place an insurance funds that maybe collect the fees. So what are the strategies that you have already taken in place and that you are going to take?
Yeah, that's a great question. Yeah, I think every project in crypto has to spend probably a bulk of the time thinking about the security model and the different security concerns that they need to address. The first is the one you mentioned, is the audit. We had the audit from both Open Zeppelin and Consensys. And so we're very happy about that, about the feedback that we get from them. And yes, we have this concept of socializing loss. And so to kind of give you like a context into that situation is as we have leverage positions, there can be a flash crashes, right? There can be situations where the velocity at which price increases, decreases, just create a moment where the collateral is just not there. So what happened in that case is, right? In that case, it depends on the reason for that, right? If it's a manipulation of prices or oracle, we do have a security layer there where our main oracle is Chainlink. And so we rely on the price feed from Chainlink, but we also have a secondary oracles. And so those secondary oracles, we use them as a way to guarantee that there's not too much discrepancy between the price feed that we get from Chainlink and the price feed that we get from those secondary oracles. And if there's too much discrepancy, then we can halt the price feed process and then actually like have like a way or some time to actually review what's going on and to find a fix. And so we can limit those type of oracle exploits. But if it's something that generally happens in the market and those things can happen, then we introduce this idea of socializing losses, where if there are accounts that are liquidated but just can't fulfill their requirements, then we will introduce this socializing loss. It can be, and this is where I think this will be but technical. I'm not too 100% sure on that, but I think that's where we'll introduce MCD token as a way to pay for that socializing loss. But it can also involve just the collateral that's in the pools, right? And so that's definitely something that users should be aware of, that in the case of a flash crash, there can be a case scenario where a share of the liquidity pool will be used to pay for those liquidations, right? But those will be proportionate to the shares of the pool. And I think, right, this is where the MCD can be used. The MCD could be used as a way to pay for those losses. So there could be a way to limit the cost of those socialized losses.
Cool. And another question from the user is if you can anticipate, if you already know, and if you can, obviously, which would be the next tokens that will be there. I mean, we before said that okay, we have to wait about Chainlink as soon as there is a feed for the tokens. You basically have all the requisites for listing, but then you need to understand the volumes, etc., etc. But you already have someone that is ready in the pipeline.
Okay, so we can't make any announcement until it's ready and official. But I can say this: we're working very closely with the Chainlink team, with Johan and others on their team. They've been amazing. We've had a great relationship with Chainlink. They work really fast. The thing that we need is a very accurate index price, right? It has to be really fast in how we're able to get the delta of differences. So as they provide those price feed, there's also the idea of decentralization, right? It needs to make sure that it's available throughout the entire network. But they've been very flexible and very active. So we can say that there are definitely more perp coming up. What I can say is they are focused on assets that are very popular in DeFi, right? And that's our focus. I wish I could say more, but stay tuned. I think it's very, if you're into DeFi, I think what's coming up is very exciting, right? As you can see from the one that we added recently, we're looking at both the building blocks of DeFi, but also the projects that are exciting. They're doing really interesting things in that space and adding a lot of value.
Mm-hmm. Cool. And the last question from a user is, what about the mobile experience? Right now, MCDEX is a desktop application. It's cool, it's great, but we know also, for instance, FTX, that obviously is centralized, but many people, I mean, me too, you too, are basically interacting most of the time with their mobile phone. So desktop is okay for professional, but at the same time, the professional would like to have, maybe a limited subset of features, but also accessible from mobile. Do you have something in the roadmap for this?
Yeah, and I think there was one aspect to Chris' question I just answer as well. So when it comes to insurance, that is something that we have been talking to within our community and to our tech team. So again, we don't have any announcement there, but it's definitely something that is an added concern on our security model. And I think it makes sense, and it's great to have a project like Nexus Mutual that provide that for the DeFi space. So it's a great building block or money Lego. So it's definitely something that is on our radar. For mobile, yes, one of our lead engineer has been working on a mobile version of the exchange, and as well one of our ambassador, one of our high roller, has a strong relationship with the Status team, and the Status is working on this kind of like this mobile friendly Ethereum ecosystem, and they have this really cool app where people can chat and send each other tokens. And so we've been talking with team like Status on actually how to integrate onto their platform. And so we're actively working on the mobile version, and I think there'll be a lot more announcement in that directions. And definitely for traders, I think it makes sense for them to have access to this desktop version where they have more details, but also, it makes sense to actually have notifications, to be able to do some action from your mobile application. So we're definitely working in that direction. Fortunately, we don't have any date or when we can make an announcement, but it's definitely something that we're working on.
Cool. Thank you very much.
I want to close with the question. I think the hardest question. So, why a trader has to choose MCDEX, Gary?
Yes. So I think the space right now is like Game of Thrones, where you have different kingdoms with different strength and powers, magic or not, and dragons. But so I'd say, I think most projects are aware of each other, right? Different strengths and weaknesses. It's a bit of both, of competition and collaboration. The more projects enter the space, the more we can understand like different ways to look at perpetuals and derivatives in general, and where they see value, and we learn together as a space, and so that's great. So I would say the projects like FTX or SNX, even Open, which is more focused on option trading, but once you get into that, you can also get into other types of derivatives. There's UMA or UMA, I'm sure I pronounce it. So there are different projects coming in with different ways to address derivatives. What I think is different for MCDEX is the hybrid model. And so what we see in derivatives is right now, because of the previous experience with trading perpetuals, the zeitgeist, right, or the way we think about perpetuals is via our order book, right? But then when you think about how many people are comfortable or experienced in trading derivatives versus how many people are in DeFi or in crypto, I think you're looking at a very small segment, right? And so the question then becomes, how do you onboard more people with lesser experience in trading derivatives, or just in general, just knowing the value of derivatives? Like for me, before I joined MCDEX, I thought derivatives were really a way to speculate, almost like the casino. I didn't really know too much about the actual utility that they play for the market.
Mhm.
So very briefly, what derivatives are really able enable people to do is to figure out or to answer some of the inefficiencies they see in the market, right? So that if I have an opinion as to the direction of E for another asset, and I'm very bullish or bearish, and I want to express that to the market, if I can only have access to the spot trading market, then I only have access to what I have as capital. But if I'm a retailer, it's very limited, right? The moment you start introducing derivatives, including leverage, you have better ways to kind of answer and to kind of address that inefficiency. So obviously, as a trader, you get more, right? If you have leverage 10x, then you can make 10x more. But also, the market is actually able to fix the inefficiencies better, right? By giving smaller trader access to those tools, it allows the market to become more efficient. And so I would recommend anybody to look at the top 50 projects in crypto, go on CoinGecko and CoinMarket, and just ask yourself, how many of those projects that you see in the top 50 do you think belong in the top 50? And so that will tell you how much inefficiency you see in the market. And what if you had the opportunity to address those inefficiency the same way a Warren Buffett or a whale will have access to do so? So I think that's the context into which MCDEX is trying to add value, is to say, how do we lower the threshold for participation in the retailers and maybe lesser experienced traders? And so by providing this hybrid model of this on-chain liquidity, I think we will see a transition from the order book into more, how would I say, into more different type of user experiences, user interfaces, right? Where we can provide new services, new ways to think about investing. One that we're working on is called the MC Fund. And so an MC Fund, what we'll do is we'll incentivize experienced traders to allow copy trading. And so copy trading really means that as a lesser experienced trader, I can look at other experienced traders and say, well, I see these returns from this trader and I want to copy trade. So I want to allocate a certain amount of my tokens. And then whenever that trader makes a move, then similarly with those tokens that I've allocated, moves will happen on this pool. So it's kind of like a liquidity pool that is ran by a trader. And so the trader will basically make certain trades, and then the pool will copy those trades. And so it incentivizes experienced traders to share the strategies, but it also makes it a easy onboarding for lesser experienced traders to jump into derivatives, to get familiar with derivatives. And so there are different approach in how to think about building derivative infrastructure for DeFi and for crypto in general. We think transparency is huge, and so we're glad to see other projects kind of coming and bringing this decentralized architecture. But we also think it's very important to bring education, to make sure that the crypto space as a whole learn and have easy ways to trade derivatives. And so we think our roadmap will show that to users, and we're definitely looking forward to have other projects and other partners to build with us to add value there.
Cool. I think that I don't see any other question from the user side. I'm pretty satisfied, and I'm very happy for this conversation. We are waiting too much, to be honest, but I hope that maybe in a month we will meet again in a call like this, and we look for the advancements of what Montecarlo DEX did from from the liquidity, the total value liquidity locked in Montecarlo, but also the volumes and the features. So I'm really, to be honest, bullish in this sense. Okay,
Thank you very much, Gary.
Thank you
for your time.
Thank you very much. Stay in the call. I'm gonna to stop.
All the information that we mentioned basically regarding community of MCDEX will be in description. There will be also we are sharing also a link to trade on MCDEX and test the platform in our community. So we will for sure give you our feedback soon. Thank you very much.
Thanks for having me. It was a pleasure. So happy to do it in the future as well.
Thank you. Bye, Gary.
Bye, bye.